Hey, this is Matt from InvestiQuant. Today is Tuesday, September 14, 2021. The markets have been weak again today, so we had another gap up that has sold off from the open. We are trading down near the lows as we approach the end of the trading session. So what we'll look at this afternoon is what has happened historically with this type of price action where you're pushing lower from the open, trading down near the bottom portion of the range during the week of options expiration. So let me go ahead and set this up and discover. I'm going to grab all four instruments. We'll use an entry time of 3 p.m. Eastern time, set up as a long. And the way I'm going to describe this is I'm going to go into the post-open filters, and I'm going to say that the open was in the top 25% of the intraday range, so that means it would have opened somewhere around the top portion of the range near the high of the day, and it is currently trading in the bottom half of the intraday range as of 3 o'clock. So I'm going to go to the intraday close, say that that is in the bottom half, hit equals there, close in bottom half of intraday range. So that will mean we have a red daily candlestick forming where the open is somewhere near the highs and the 3 p.m. price is in the bottom half of the intraday range. Next, I'm going to put it in a similar market environment. We are currently below a 10-day simple moving average, but above a 200-day simple moving average. And then lastly, in the market events section, I'm going to say that it is the week of options expiration. I'm going to grab that from the active today. And this will specifically look at just the days that fall within the week of options expiration. Now I can click View Results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when it is the week of options expiration and you are in a weak bull environment, which is defined as below a 10 but above a 200-day simple moving average. And you are seeing kind of a directional down day where the open is somewhere near the highs of the session and the 3 p.m. price is in the bottom half of the intraday range. Historically, we've got 56 samples in the S&P to examine dating back to 2003. The NASDAQ has 64, the Dow 62, and the Russell 52. So similar sample sizes across all. We've got over 200 samples if you look at them as a group. And the win rates on them are more skewed towards the downside. So the S&P is the strongest of the group with 45% of those closing above that 3 p.m. price. For the other instruments, it is all right around 40%. So NASDAQ coming in at 41, Dow coming in at 40, Russell coming in at 40. And that win rate is referencing where's the price relative to the time of entry. So saying a 40% win rate means that 40% of those have closed above the 3 p.m. price. If we look at the average moves, they are all pretty similar in size. So average loss just a touch bigger than the average win for the S&P. For the NASDAQ, it's the average win that's just a touch bigger. For the Dow, the average loss just a little larger than the average win, and that's the same case with the Russell. But they're all pretty close in size, so not a big difference in any of those. But the win rates are a little bit weak as a group. Looking at this pattern, which has taken place all the way back to 2003, we've got a decent sample size among the four. So hopefully you found that helpful. Good luck today. We will see you next time.